Good afternoon, everyone. Thank you for joining me. Thank you for joining me for the Wright-Patt Credit Union Finances in Focus Live. It is Friday, and I am so glad we have made it to another wonderful weekend. My name is Ivy. I'm just going to wait a few minutes to let everybody get on as we talk about Borrow Smarter. This month, we are going to be doing Borrow Smarter Part 1 and 2. Today is Part 1. We're going to give you some quick tips to be a wise borrower, thinking a little bit like a lender and putting yourself in a good position if you are needing to obtain loans. So again, giving myself just a few minutes. Thank you for those hopping on so far. Please feel free to like and share this video so that others can join in. Again, if you or someone you know wants some tips to borrowing smarter, getting started on the right foot, today's session is just for you. I said tonight, I do webinars in the evening. So again, just giving a few moments to share your message. I'm going to do the same with some of my family and friends, and we'll get started in just a few minutes. So thank you for those of you who have joined so far. As you join in, feel free to say hello. Type in the chat box. Let us know where you're checking in from. Sometimes I can't actually see the chat, which is weird, but there are other times where I'm able to see it. So please be sure to say hello so we know you're here. And again, share this message with others. Our Finances in Focus Live today talks about borrowing smarter, Part 1. Today we're talking about quick tips to help you be a wise borrower. And then the other topic we'll talk about in 2 weeks is once you have the debt, what do you do to pay off the debt? So we've got two parts to this. I'm really excited to share this, especially as we go into the holidays and a time where even more people are borrowing. We actually do see an uptick in some of our loans during this time. So as we go into this shopping and borrowing lending season, I did want to just take a moment to make sure that we're taking a pause to be wise about our borrowing practices. So again, we'll just wait about one more minute and we will get started. All right. So again, welcome to those of you who have just jumped on. My name is Ivy. I'm a community development specialist and certified credit union financial counselor for Wright-Patt Credit Union, joining you on this beautiful fall Friday with our Live in 5 live stream on Borrowing Smarter Part 1. Couple of tips that I want to share with you today on how to be a wise borrower. If you're joining us, comment in the comments below, say hello, ask a question. We'll be sure to help get those answered for you. You know, it's interesting, when we posted about this topic, we actually got a couple of questions or a couple comments about, well, the best way to borrow is to not do it at all, is to be debt free. And while we understand that there is freedom that comes in not having loans, we also understand the reality that as it relates to managing credit, as it relates to obtaining opportunities that may be costly in the upfront, but that can be paid for over time, there is a place that credit and loans have and that debt has in your financial journey. And that's a reality for many of our members and many in the community. And so what we wanted to do was to make sure that whether you're getting started on your financial journey or maybe in the middle of it, that we could offer some tips to help you think about how you're being borrowers in a wise way. Because yes, debt freedom is a wonderful thing, but on the road to debt freedom, there's wise debt management. And that's what we're here to talk about today. So I just want to give you a couple of tips on how to be a wise borrower. And really, it's interesting. Being a wise borrower starts with things that have nothing to do with debt. Your first step to being a wise borrower is actually thinking about the goal that you have for the debt you're going to obtain. What financial goals do you have? What lifestyle goals do you have? And how does that borrowing product, that loan or tool that you're going to use, help you to obtain the goal that you're needing to achieve? Many times when we get loans, we get them to fill a gap and meet a need that we may not be able to fill with our own resources. And that's not necessarily being goal mindset when it comes to our loans. That's actually being reactive. So if we can switch our approach to when we borrow to thinking about the loan in the terms of what goal is this loan going to help me meet and how can it help me meet it over time, that will be one step to ensuring that we're borrowing smarter. Another step for those of you that are just getting started on your lending journey is to start small when it comes to borrowing. There's nothing that says that we have to go out and get the biggest, broadest, largest loan available in order to meet our goals. I recommend that, especially for young borrowers, individuals that are young adults or just starting out on their credit journey, to get something like a share secured credit card, which actually takes the security of your cash but functions as a credit card for you, or a first time user credit card, or maybe a small personal loan. Charge one small thing on that credit card, for example, like a tank of gas or a trip to the grocery store, and have cash budgeted for that. Get the bill, because when you're building credit, you actually have to let the bill cycle through in order for it to report to your credit activity. Get the bill and pay it. The most important impact to your credit is your payment history. How do you pay your bills? Do you pay them on time, at least the minimum, and according to the term? And so doing something like that, starting small and having that healthy activity, will help you build your credit while also practicing using debt before you obtain something larger. The other piece to practicing using debt when you're just getting started is, even before you obtain a loan, practice putting up what you think you can have as an affordable payment. This is especially valuable for things like purchasing a car. A lot of times when a young person is interested in purchasing and financing their first vehicle, I will encourage them for a few months before they actually make that purchase to practice putting up what they think they would be able to afford or want to pay in a monthly payment. That does two things. One, it creates a reserve so that they have money to take care of the vehicle. Number two, it helps them to practice the act of putting the payment away before it's due. There are statistics that show that nearly half of young adults, 18 to 24, do not pay their bills on time. And so taking that step can help to avoid and alleviate that statistic that we know to be true. So practicing using credit in two ways. One, starting small and using a small charge on a card that you can then pay off each month. And then two, actually saving the down payment, or excuse me, not the down payment, saving the monthly payment of what you think will be your expense when you get a loan in ahead of time before you actually use the loan, to ensure that the loan is affordable. And what does it mean to be affordable? It means you can pay the debt as agreed on time each month, while also taking care of your other expenses that you have and still building reserves and savings. That's the one thing that we get caught up on when it comes to lending. A lot of times we get loans, and because we can pay the monthly payment, we think we can afford the monthly payment. Well, wise borrowing says we can afford the monthly payment when we can take care of that and also meet the other needs that we have when it comes to our finances and our lifestyle. The other tip that I would recommend to you all would be to allow yourself time to research the best option when it comes to choosing your loans. So when it comes to loans, they are not all created equal. There are several tools out there that have different purposes to meet your needs. Everything from credit cards to personal loans, student loans, consumer private loans, private student loans. There are federal loans that the government provides. You have heard of probably mortgages, home equity lines of credit. Even in the credit card world, there are first-time user credit cards. There are reward cards. There are low interest rate credit cards. So there are so many options out there. And even outside of your institutions, there are predatory options out there, meaning options that are not necessarily there to serve your best interest. They're there likely for the company's opportunity to make money. So you have to be careful about those as well. Predatory loans like payday loans, high interest rate cards, high interest rate or title loans for vehicles. Those kind of loans that may be easier to obtain in certain places can also come with some pretty predatory or negative terms that don't necessarily benefit your pocket or your goals in the end. So again, before you obtain a loan, put yourself in a position where you can do your research and figure out what's out there and what's available to you. It's always good to start with your financial institution, a place like a Wright-Patt credit union, for two reasons. Many times they will have a big portfolio of options to offer you, potentially, based on your credit worthiness and approvals, but they may have a multitude of options to offer you. And because you're building a relationship with them outside of your lending picture, working with them inside of your lending picture just makes sense. It's kind of like continuing to strengthen the network within your family. So check with your financial institution as a place to not only understand what's out there, but to also see if they have an opportunity to work with you with the best rates and terms for your situation. The final tip that I would offer you is understand how credit and debt go hand in hand. So credit, which is your credit report and score, looks at your, how you navigate debt and your finances. And it's a report that, considers a narrative of that information and spits out a score as a result. So credit is taking a look at your debt management abilities. On the flip side, how you manage your debt impacts that, right? And so your credit report and score is going to impact what opportunities you have when it comes to lending, among other things, your income, what other debt you have, those things impact it as well. But your credit report and score is oftentimes the first door to open for your opportunities when it comes to lending. Likewise, once you get the loan, how you manage it will then impact your credit score and your report going forward, which impacts future opportunities. So understand that credit and debt go hand in hand, and make sure that when you're ready to jump into the loan game, that you're also ready to do it in a way that's responsible, that keeps you in the best credit opportunities going forward. The goal is to keep you in the in the 700 club when it comes to credit. Now, we'll do a whole session on credit because that's a different topic. But in general, you want to be in the 700s when it comes to credit. That gives you access to the best rates and terms typically when it comes to loans. Again, there are other considerations with your loans. How much income do you make? What other types of loans or bills do you have? Do you have other things in collections? It's all about looking at your risk when determining if you are attractive to receive a loan or eligible to receive a loan. But many times that first foot in the door is your credit. So you want to manage your debt wisely as a way to keep your credit healthy. And then as a result of keeping your credit healthy, you open the door to more lending opportunities in the future. So those are my quick tips for you. Just to recap, practice before you borrow, right? By, starting small and actually practicing saving saving for the loan that you're going to have before you ever have it, saving for that payment. Giving yourself time to research. Loans are not meant to be an emergency, what I call the ETM, emergency teller machine. They're not there just in emergencies. Now, loans are there to meet your needs. In some cases, those are emergency needs. But if you can research before you're actually in need of the loan, you give yourself a chance to learn about what's out there and give yourself the best chance to understand what meets your goals, which brings me to my other tip that I mentioned at the front end, which was understand your goal and your vision for what you want to achieve and how the loan actually fits into that instead of vice versa. And then finally, the last tip was to understand how credit and debt actually go hand in hand. And so managing one wisely benefits the other, which ultimately opens the door for more opportunity. So those are our tips for today. If you want to learn more about not only managing your money, but managing your credit, be sure to tune in. We are going to be talking about managing debt actually in a couple of weeks in our part 2 of this Borrow Smarter session. And also, we are starting a Finances in Focus webinar series. It's a 5-week program. We start our next class on October 20th. If you're interested in participating in that class, which takes you through not only what we talked about today, but all of the aspects of spend, save, borrow, and plan to help you be a wise and healthy consumer and get your money in order, you can feel free to register for that session. You can do so at wpcu.coop/education. We have an event calendar out there. And again, that class is starting up on October 20th. I would love to have you all in my class as we talk through the foundations of money management, spend, save, borrow, and plan, including what we've talked about today. Thank you so much for watching. Have a wonderful day and a great weekend. And we will see you back at our next Finances in Focus live stream. Thank you so much.